Breaking bad. I mean, breaking out. So, unlike a Walt White situation where only bad things are happening, when a company's share price is breaking out, that is actually a good thing and something I strive to look for every single day. So, I'm looking for companies whose share price looks like it's breaking out. And today, I do have found one, and that company is PayGroup. Share price went up 13% today on January the 6th, 2021, and that's on a day where the overall market was down over 1%. So let's have a look at the share price of a company that is breaking out. So this is PayGroup's 6-month daily chart. So if you go back all the way back to when it started, the share price was around 80 to 85 cents. And ever since then to about the middle or late of November, it's just been drifting downwards. So this company had been on my watch list for that period. And the only reason I wasn't buying in just because of the negative share price action, and it was in a bit of a downtrend. In about mid-October, we saw the first bit of positive signs that maybe things have been changing around for PayGroup. We saw a bit of a spike in volume, and usually when you see a spike in volume, people within the market are getting excited, potentially even some fund managers. We saw another spike in volume in the end of November, and that's another good sign. And that's when we first seen the signs of the potential company's share price breaking out. And then the final sign was today on the 6th of January, where the share price went up 13% and went through a bit of resistance at 65 cents and finished the day at 68 cents on the high. So that's really good. And also there's fairly substantial volume on the trading day as well. And that sort of thing, when the overall market is down over 1%, that's pretty good. So you can just see here the two acquisitions they made. The first one was in July. That was the Talent Oz acquisition. And then about 4th of November, I believe it was, they had the Payroll HQ acquisition, and they have a different reporting timetable than a lot of other companies. So the half-year report was released on the 24th of November. I do suggest maybe having a look at that if you're more interested in this company or if you want to do some more research. Again, the whole reason I'm doing these sort of videos is to give you an idea so you can, if you like what you see in this video, maybe you can follow it up with some more research. So I'm liking what I'm seeing here. Does look like the share price is breaking out. The moving averages are coming together, and I think in the next few days, next few weeks at least, we'll start to see all three moving averages be on the uptrend, which is usually a good sign that the share price is turning into an uptrend itself. So what does PayGroup do? So you can see on the right-hand side there, they have a market cap of around $50 million. Revenue 13.5, that's a trailing 12 months. So that includes the previous half-year report they released in November. And operating cash flow 3.6 million, which is quite good considering the markup is only 50 million or so. So they are a SaaS or software with a service company, and typically those sort of companies trade on significantly more multiples than what we're seeing with PayGroup. In fact, a lot of SaaS companies are not cash flow positive and have market caps of say $400, $500 million or so. So there's a lot of room for growth with PayGroup's share price. So they are a payroll and human capital management solutions provider. So as again, the software with a service and a SaaS platforms. They are a holding company for 4 entities: PayAsia, Astute One, Talent Oz, and Payroll HQ. Clients across Asia Pacific and Middle East, and that client base is growing ever more. You can see a little thing on the bottom there. This is taken from the 31st of March 2020 from PayGroup's website. They do mention 900 plus clients. That is now grown to almost 1,200 clients. So you can see they are growing their client list, but some of that is because of their acquisitions they have made. So one thing, probably a slight concern about PayGroup is they seem to be more of a sort of a roll-up company, so they're doing acquisitions, and that's how maybe they're getting a lot of their growth through acquisitions. I prefer a company's growth to be through organic ways, not acquisition ways, but I think they're still growing organically as well. So why did the share price increase 13% today? So they released an announcement, financial year 21 sales update, and it does look pretty good. So the total contract value for the financial year to date was 8.2 million. That's a 200% increase on the previous corresponding period, and that's 3 quarters, quarter 1 to quarter 3 of 2020. 149% increase on financial year 20 sales, And just in the third quarter, they increased total contract value by 2.8 million and 115 new client entities. Not sure why they mention entities, or just not sure what that means. Maybe I'm trying to think too much about that, but it's just interesting they use the word client entities. Acquisitions have aided in the growth, so 37 new clients through Astute One. And I'd like just, excuse me, I'd just like to know how much of the growth is organic and how much is it through acquisitions. So that's one thing I'd like them to show us, is the total contract value organic growth and total contract value through acquisitions. It's probably my one slight thing I could maybe suggest. So if I was speaking to the management, that's one thing I'd suggest. So one of the things I really look at is, in this sort of companies, these small companies who issue Appendix 4Cs, is just look at their cash receipts trend through time, and even look at their operating cash flow. So this is just looking at their cash receipts and operating cash flows ever since July 18, when they entered the ASX. We can see overall uptrend in both cash receipts and operating cash flow. In April 2019, there was this one peak, so I'll just sort of leave that out. But if you leave that out, you still see a pretty good uptrend. And they have been operating cash flow positive the last 3 quarters, and there's no reason to suggest that's not going to be the case in the next few quarters. And in fact, once they release their Appendix 4C for the call it the December quarter, we more than likely will see the cash receipts above 5 million or so. So that's all I've got on the PayGroup, this company that is breaking out. If you are a shareholder of this company, maybe leave a comment, maybe add some additional feedback or additional comments about the company. Haven't done the absolute in-depth research on this company, so always willing to read comments that add to my knowledge base. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice for your own circumstances, make sure you seek out someone who is qualified. That's all for today's video. Have a good day. Bye.